Hello everybody and welcome back to the channel. My name is Smart Money Mo, and in today's video I'm going to be doing a full day trading guide strategy. This is going to cover everything, including how to analyze, what strategy we're using, how to enter, stop loss, and I'm also going to do a whole section on how to manage your trade. So the TPs, the SL to break even, and all of that good stuff. We're going to be doing this guide with a beautiful breakdown of a signal that I actually sent to the team, a GBP/USD trade which ran for 6.3 RR. As you guys can see on the screen here, yesterday I sent this to my team, sell GBP/USD. The SL, the entry, and the TP was all on the chart provided to them, so they can easily just plug this into their MT5. And yeah, the full signal was sent, and you can see just today, before I'm making this video, the full TP was hit on GBP/USD. Price tapped in and went all the way down to the level that I marked up as a take profit, and that means we are up 6% on the signals this week. So guys, I asked you on my Instagram if you guys wanted a discount for the mentorship, and you guys blew me away with all of the requests to make a discount and a sale on the mentorship. The sale is now down to £120. I haven't done this in months, right? I've been selling the mentorship for a much higher price, and at the time of making this video, once you watch it, if you go to the first link in the description, you can get the mentorship for a one-time fee of £120. You will gain access to the signals. The signal that you just saw on the screen, you will gain access to the signals. You will gain access to the full course. You will gain access to the new ALQ strategy, weekly calls, private videos, and all of that good stuff. You know, weekly watch list, all for the discounted price of £120. This is going to end by the end of July. So if you don't make advantage of it now, tough, it's on you. I'm ending this sale by the end of July, and that is the final warning. Alright guys, without further ado, let's get right into today's video. Okay everyone, so the first things first is that we need to go through what analysis do you need to do, what things do you need to identify, and how do we actually get an entry on a day-to-day basis. Well, the strategy that we're going to actually be using is some that I've mentioned previously on my channel, but what we're going to be talking about is high probability zones. And these high probability zones are very specific zones that you can find, you know, on a weekly basis, on a day-to-day basis, analyzing pairs like GU, EU, whatever. You find these high probability zones, and these zones more often than not will hit and give you a beautiful, beautiful trade. All you need is a couple of these zones a week to be profitable. So let's talk about what you actually need when it comes to these zones. For example, let's say we were trying to take an entry from a supply zone. A supply zone is simply when we have an up move followed by a down move, which caused a break of market structure. So we had this previous low. This previous low was broken by this move over here, and the last up move was up here, and this is our supply zone. And so when we have this supply zone, what we need to do to differentiate this from any regular supply zone is if it's a high probability zone. And to make it a high probability zone, we have our checklist over here. So I advise you guys to add this checklist onto your trading plan and onto this trading guide. So the first thing we need to see when it comes to our supply zone in order to find these high probability zones is a break of structure, which is very, very simple. All that means is a structural low in the market has to have been broken in order for this supply zone to be valid. So that's the first thing. The second thing is high volume. Where are we identifying this high volume? We're identifying this high volume when it comes to the down move of the supply zone itself. We can see the supply zone is here. All of this that I'm just about to highlight in red has to be high volume candles. So they need to be big red candles, often with fair value gap and displacement and whatever, all of those ICT terms. You don't need to worry about that. All you need to see is big red candles, right? Just keep it as simple as possible. The next thing that you need to see, so we'll just put a tick when we have everything. So tick, tick, liquidity sweep. This is something that I mentioned in previous videos, but all a liquidity sweep is if we look at where the supply zone is and we look directly to the left of it, do we see a double top being taken out? Do we see an area of relative equal highs being taken out? Do we see two supply zones next to each other being taken out by our zone? If we do, we can, deem this as a valid liquidity sweep for our zone, and we can tick off the next box. There we go. The next thing we need to see is inducement. Inducement is where we have a level, a trading level below our actual level. So this is the supply zone that we are looking to trade from, right? And below this level, if we have any other levels of trading where any, sort of retail trader or small bank or anything wants to trade from, for example, over here we have a sell order block, right? Or we have a supply zone here, down here. This counts as inducement, right? Because people are going to be entering early on, like positions here, and we're looking for price to induce all of the early sellers, take them out the market, and come into our supply zone over here, the high probability zone. So that is the next thing that we need to look out for. Just get rid of all of this. And we put our tick. Now, liquidity to be grabbed. This is when, again, below our supply zone, we can see another area of liquidity. So whether this is relative equal highs, a high, a double top, two supply zones next to each other, any sort of liquidity level, we need to see this below our zone, and this will act as an extra confluence for this high probability zone. Why? Because this is going to fuel and magnetize price towards this zone. Because as we get closer, price is going to sweep this. That's going to fuel the move all the way up into our supply zone, and price will crash towards its desired move. Let's erase all of that. And then we move on to the final rule, which is a very simple rule. The supply zone can't already be mitigated. So once we have once price, has tapped into this zone, we can't trade from it again. So if there are any previous wicks, or if there are any previous tap into this zone, then we cannot trade the zone, and we should not be trading it, and it is not a high probability zone. So those are the 6 rules which make our high probability zones. And like I said at the start, all you need is a couple of these high probability zones in a week to get some profits, right? It's not simple at all. All of my concepts are simple, but they are extremely effective. 2 optional things that you can look out for to make your trade even more high probability is, the first thing you need to see is whether you align with the Fibonacci. So you take your Fibonacci from the top all the way to the bottom of this range. So in this case, that would be all the way down here. And see, is your supply zone above the 50% mark, right? This should be at least a minimum. It should be above this 50% mark, because we want to sell high and then take away our position at this low. So over here, we can clearly see this is roughly the 80% or the 71%, our nice zones of the Fibonacci. So this is good. And the last thing is pro order flow. Pro order flow has been explained in my previous, literally the video right before this one. And what pro order flow means is that this zone is a mitigation of a previous zone. So this supply zone, it's pro trend, right? To keep it simple. So let's just say, let me just delete everything. So let's just say there was a previous supply zone over here. When we have our supply chain like this, so supply zone, then taps in, makes a supply zone, then taps in, makes a supply zone. This supply chain also acts as an extra confluence to make this trade even higher probability. So guys, I have given you all the strategy, which is the high probability zones. I have taught you how to identify your high probability zones using all of these rules to the side. Make sure you note these down and add them to your trading plan. Now, let's move on to how to actually manage the trade and go about all of that stuff. So, trade management. The first most important part of trade management is understanding your take profit. It's all good and well having a good trade, but if you don't know where to take profit, you can completely muck up your trade. So the first thing is, okay, our entry is from here and our stop loss is here. That's already sorted out because our zone gives us that already. We know that if price goes above the side, the zone will be, our trade will be invalidated, and the zone will be invalidated, and the idea will be invalidated. Therefore, it's most logical to put our stop loss over here. Our entry goes at the zone. So let's talk about TPs. Our 4 most important levels to put TPs or take partials is levels of imbalance. You can call it fair value gap as well. Opposing levels of supply or demand, levels of liquidity, and significant highs or significant lows. Each of these depend on whether you're trading a supply zone or a demand zone. So yeah, respectively, look at your trade. If you're trading a supply zone in this diagram, for example, we would be looking at imbalances over here, imbalances over here, imbalances over here for take partials. For example, this grayed out area could be an imbalance. Or for example, it could be an opposing zone. So since I'm trading supply zone, I need to be wary of potential opposing zones which price could react from. So for example, over here we have a demand zone. Maybe I should do TP1 over here to be careful of price coming here and reversing and taking out my trade, and all of that hard work goes for nothing. So I could put TP1 here to secure some profits off the table. This is the second example of a good TP and take partial. Another example is a liquidity level. So for example, let's say over here, instead of having one low, we had 3 relative equal lows. This would make as a good TP, as price would be attracted and magnetized to come and sweep this level. Therefore, it would be good to align our TPs over here. Another thing would be a significant low. So as you guys can see, we have a significant 1 hour low over here from the higher time frame. This would be another important area to put a TP, because if we are bearish on the 1 hour time frame, we know that price is going to be looking to sweep this low. Therefore, it would be most logical to put our take profit where price wants to go, which is to sweep this, to break this 1 hour low. Those are the key points when it comes to taking profit, right? You don't really need much other than this, but taking profit it seems like such a simple thing, but it can really change the difference between a good trade and a bad trade. So this is the first key step for trade management. And then for me, the second key thing for trade management is SL to break even. For me, I will usually put my SL to break even after I see a 5-minute break of structure. So let's say I entered over here where this blue line is and it says entry. I will put my break even after I see price breaking this structure. So price is going down, follow my arrow, going down, going down, going down, going down, going down, going down, going down. And then here we break this 5-minute structure. So this is now where I can tick this box and put my break even, which basically means I trail my stop loss all the way to my entry point, so that even if price decides to reverse on me for whatever reason, I will be out of the trade with risk free. I'm losing no money. So once I break this 5-minute low, my trade is virtually risk free and I can only win from this point. Or draw. So I can either go break even or I can win. There is absolutely no more loss as I'm going to break even. Another important point where you can put your trade to break even after a zone fails. So let's say we had a demand zone over here, and let me just draw that out. So let's say we had a demand zone over here, and then price breaks through it. This would be another significant point to put break even. And another last thing where you can put break even is if your trade just simply reaches 2RR. If your trade reaches 2RR, you can put your TP to break even. This is my least sort of preferred way of deciding when to go break even, as there is no structure or logic behind this. This is just a simple sort of mechanical way of thinking, where if I reach 2RR, I will go to break even. Like I said, I prefer if I use these two, as this is a more structural and a more logical approach, as I'm looking for a 5-minute break of structure and a zone failure, which will hint to me that this trade is going right and I should put my stop loss to break even. Okay guys, this is the basics of this trading plan. It teaches you trade management, it teaches you how to put your stop loss to break even, it teaches you take profit, and it taught you the strategy for actually getting the trades. Hopefully now you have a good understanding of what this trading plan is. To better your understanding, now we're going to move on to the GBP USD signal which I sent to my team, and we're going to break that down using this trade guide. So I'll see you guys in just a sec. Okay everyone, here I am on GBP USD. I'm currently on the 10-minute time frame. I forgot to mention in the previous slides that the majority of these trades are probably going to be on the 10-minute, 15-minute, 30-minute or 1 hour time frame. Don't expect to be finding these high probability zones on the 4 hour or anything like that. This is, like I said, a day trading guide. This is not a swing guide or anything like that. So yeah, 10-minute time frame is what I am on GBP/USD, and all I've put on the chart so far is this 10-minute level of supply. Simply, it is a up move before this crash to the downside, which caused a very simple break of structure. Right? Very, very simple stuff. Now what we're going to do is we're going to go through each and every one of these checklists. So we're going to go through all of this checklist to make sure it's a higher probability zone, following through with our trading guide. And then we're going to go through the take profit stuff, after we see how the trade plays out. So first things first, we marked up our break of structure, so that's done. The second thing is the high volume. We can identify the high volume over here, which is that after the zone was created, we can see a high volume candle followed by another high volume candle followed by more high volume candles. So again, we can check off these two off the list. Liquidity sweep. Now, we have two very visible liquidity sweeps. First thing is we have this liquidity sweep of this trendline liquidity over here. So I will just label that sweep. And we have another sweep of this high over here, which is our other sweep. So now we have two sweeps of the high where the supply zone was created. So that is another thing ticked off the list. The next thing we need to see is our inducement. We can see there is a supply zone and a support level that many traders will be trading from SMC, ICT, support resistance, anything, right? There is a clear trading level over here, supply zone, equal highs, all of that stuff. So this is a clear level of inducement for me, as I am trading this level and these traders are trading below me. So in order for my orders to get fulfilled, these people have to be induced and stopped out. So what do we have here? We have our inducement. Keep that like that. Next thing is liquidity to be grabbed. Very, very clearly, we see a bunch of liquidity over here, which needs to be grabbed. I'll usually just symbolize that with a dollar sign to symbolize liquidity, or a pound sign in this case, to symbolize the liquidity. So you can see here there is a many equal highs. There is just a resting level of liquidity over here, which we know it needs to be swept and price needs to come up towards this manner. And lastly, is this zone mitigated? No, this zone is not mitigated. There are no wicks back into the zone. Price is yet to tap into here. We can see it is a clean zone. For now, that is everything we need. What we're going to do is now actually we're going to run through the optional stuff as well to make this an even higher probability trade. First things first, where's my Fibonacci? We'll get this down and let's see how this aligns with the Fib. Let's actually see. Okay, so we can see here there's even more liquidity. So let me just drag this down here. And we see that the Fib is in line with our trade. Our golden levels of 0.75, 0.75 and 0.85 are in line with this trade, giving us a really good positioning for this trade. We are well above the 0.5 level and we are in between our golden levels. So that is perfect, right? Is there anything else? Pro order flow. So in this case, the pro order flow is a bit weak. I can see we have a previous supply zone over here, maybe on the 3-minute time frame. Did we tap into anything before this? Not really. So I'd say the pro order flow is slightly weak. I can see only one mitigation of this blue candle over here. But for now, that will do. This is an extremely high probability zone, and this will serve as a very good trade. Now, what we're going to do is we're going to set our entry and our limits right here. And we're going to wait for price to tap us in. For now, I can see that my take profits will be at, for example, for now, I'd say we have this low over here. I'd put them for now at either this level over here, this fair value gap, because, price could reverse from this, or I'd put them at this low. But for now, we'll just put them at this fair value gap. Now, let's see. Price. Tag this in. Now, what I'm going to do is I'm actually going to switch over to the 5-minute time frame so we can wait for our break-even point. So realistically, I'm looking for break-even points at this failed level of demand. because there's a lot of messy price action here and I don't want to mess around with this, and I want to see a clean break of a demand zone. So let me see for this to fail. See, look, it's good we didn't set a break even yet. Why? Because we can expect reaction from this demand zone. That's why I make it very important to go structurally based rather than RR based, because we would have hit 2 RRs right there. If we went break even, we would have missed out on the rest of this trade. So what do? We wait for this demand zone to fail. Wait. See, look, it hasn't failed yet. It's still respecting it. The minute we see it fail, boom, that's exactly when we go break even and take partials, right? So now our trade is risk free. I can literally put it there and we will be risk free. So what I'll do here is set this as the break even line, and as you can see, we hit that. And yeah, let's keep monitoring this trade. So in terms of TPs, right, we can take profit here right now as price is. We can take partials at this fair value gap, for example, just in case we see any reaction from it. Or we can take our next take partials, for example, at this fair value gap over here. And then if you want to, we could push our TP all the way down here, or we could put it at this demand zone over here. Yeah, I'd put my final TPs right at this demand zone and this volume gap. So yeah, we're using all of this stuff, right? The imbalance, we could TP at this imbalance or this imbalance. Our final TP is at level of imbalance. The opposing zone, this is an opposing level of demand, and we are setting our TPs there. Significant low, we can put at this significant 1 hour low over here for a more ambitious take profit. Let me just re-edit this. For a more ambitious take profit of, you know, around 1 to 8, 1 to 9. But for now, we'll keep it here. And SL to BE, we already discussed, will be at the failure of that demand, and we've already hit BE. Now let's play the rest of this trade, and there we go. Price goes for our full TP at this level of demand, and you can see the reaction. You can see that. And you don't want to be dealing with all of that stress when you're holding a trade. So what do? You go for a logic-based TP right at this level of demand. I think price eventually does crash all the way below this. Yeah, so you could have went for this one as well. But in my opinion, I would have went for this, and that is exactly what I told the team to do. And yeah, you can go check that at the start if you don't believe me. I sent the proof on the PowerPoint. So yeah, guys, using this exact system, you can catch trades just like this on a daily or weekly basis. Again, all you need to do is follow the high probability zones and follow this management plan. If you guys did enjoy this video and are enjoying the 10-day video series, make sure to leave a like on the video and leave a comment showing your appreciation, as I would really appreciate that. If you're new to the channel, make sure to subscribe, and yeah, make sure to note down all of the things that you found beneficial from this video. And thank you very much for watching, and I will see you in the next one.